All right, this is our bull video now. In case you didn't know, I did a equivalent to this prior about bearish arguments for different indexes, and now we're going to do the bullish side of things. And I've tried to keep this very evenly weighted. As I mentioned in the last video, I've got 9 bearish indexes and 9 bullish ones. And it may seem odd to be arguing from different sides of the aisle, but you know, that's kind of the point, because the different markets, different takes of the financial markets have different predispositions, and it is not a slam dunk in either direction. I think if this is a bear market, which I still believe it is, that's what makes this so challenging, because there's a lot of cross currents. But let's look at these, and I'll just I kind of surprised myself by how hesitant I was in the bearish video. Let's see if I surprise myself to see how enthusiastic I am in this one. We begin with the Dow Jones Composite. And as we look here, the problem for someone like me is what has taken place this week. Because ever since this trend line came into existence at the beginning of 2022, it has steadfastly had increasingly lower lows and diminishing energy with these highs. You know, in fact, this is a great example because it was so weak it didn't even get even close to tagging that trend line before it resumed this hard fall. And then it bottomed naturally on a day I'll never forget, October 13. And up until here, things looked just fine. Back on, I'm sure if we jumped back to December 13, I was running all around saying short everything with the ticker symbol, because at the moment it looked like here we are again. You know, we've done it 1, 2, kind of 3, 4, 5, you know, over and over again. This trend line was the guide, and that was actually okay until literally Thursday of this week, and it broke it. And you know, if we're going to respect trend line breaks to the bottom, we've got to respect them to the top too. And this shows a strength that I find troubling. Here's the Indu, which is kind of the same argument, because the Indu is simply a portion of the Dow Composite. In the case of the Indu, it broke out way before this Thursday. It broke out way back here on November 10, incredibly. And since then, it has not in any meaningful way gotten below that trend line again. It successfully challenged it back here just before Christmas, when we were banging down at 3,800 on the ES and would not go below it. And then it started to gain strength. Now, it's not exactly, you know, a riotous rally here, because we haven't even mustered the strength that we saw back in November. But it's above the trend line all the same. Here's the Nikkei. Now, this one is not unto itself some amazing bullish setup, but there's nothing bearish about this. Japan has more problems than you can imagine, and their market, for whatever reason, good, bad, or indifferent, is doing just fine. Thank you so much. We all realize that this is, you know, because of tremendous government intervention. I mean, the Japanese government basically is their bond market. They're basically their only buyer left, and they are a huge buyer of equities. So this bit here, when Japan was actually a thriving, growing, prosperous, organic economy, ended in the 90s, actually in 1989. And since then, it's just been, let's all pretend. But again, whatever the reason, we're interested in price. This isn't breaking down. This isn't a top. This is just chugging higher for, as I say, you know, for whatever reasons, good, bad, or otherwise. Semiconductor index. Here's another example that until recently, things were still okay. If we even carve out the past week or so, things were still pretty good, because we had our top here and we had our lower lows and lower highs and all that. But we have, with recent strength, pushed deep enough into this zone that it kind of calls into question the validity of that zone. Now, to be sure, this overhead supply is going to make it very, very messy and mucky and thick and yucky for, I sound like a Dr. Seuss analyst here, for this to go much higher. I mean, this is kind of a cinch compared to this muck up here, because there's all these pissed off buyers that want to get out. But having said all that, it is certainly not the clean, lovely top that it was, past tense. Dow Transports, this has been extremely strong lately. Look at this. Is that amazing? It had been channeling down nicely, and only recently did it screw that up, because we had been just daintily and cleanly and lovely fashion here, just working our way lower, but then this happened. So I don't know who popped that cork, but it's popped nonetheless. So that's another, and I'm sure that obviously it flowed into the Dow Jones Composite, because this is an important part of it. Here's the FTSE. Now this is Britain, of course, and the point I want to make here is an important one. So we have clean top, and a clean top, and a clean top, but look what's happened. This was a beautiful thing, like so. And I'm sure I pointed this out as like, oh, we're just getting started. Because in these instances, it was like plunge, retrace, really plunge. And we had plunged hard on this, retraced, but what happened? Push, 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 push. And it has rendered this pattern an interesting artifact and footnote, but with no meaning in terms of overhead supply. Clearly, we're at lifetime highs here. It boggles the mind, but we're at lifetime highs. So this guy doesn't matter anymore at all. And this was basically disproved and neutered and destroyed pretty much the moment it got into this zone. I mean, as late as November, you could have argued that, well, these guys are just asking for it. But no, it just kept going. And I don't know the quirks of Britain enough to know what caused that, but it doesn't matter. It happened. So clean or not clean, these patterns can get ruined. Here's the VIX. Now this is tough, because one can make this bullish or a bearish argument. I mean, it's bearish in as much as that, G options sure are cheap now. But this thing, has gotten awfully low. And as history has shown, you can spend years and years and years in this sort of, is that amazing that there was a single digit VIX back then? Is that just jaw dropping? 8.54, incredible. Anyway, so the fact that we've sort of re-entered this like teen zone is a little troubling, but that, as I said, that would be easy to argue from the bearish standpoint too, in terms of what a bargain things are now. Here's XBD, the broker dealer index. Same idea as the FTSE. We had a clean top, and then it just got ruined. Just ruined. Look at this. Higher lows, higher highs. Just a classic setup. And I'm just going to, might as well, since we're in the neighborhood, just draw a little pattern here with my auto trend line, a good buddy of mine, like so. There. Last one, XMI, major market index. Kind of the same notion as the industrials and the composite, that we were doing just fine, and then that got zapped early in November, and we've been above it ever since. So as you can see, there's a lot of spoilage here, and that's why it's a little discomforting, because you look at these things and you kind of wonder to yourself, who's right, who's wrong? Because there's powerful arguments on each side. So I don't know if this is helpful or not, but I hope it's at least good food for thought.